You guys, I want to welcome you back to my channel. And in this video, we're going to talk about a sniper strategy that when using Wyckoff schematics can help you maximize your profits. With this strategy, you can possibly catch 1 to 8s, 1 to 10s on every single trade that you take. Now, I do want to put a disclaimer that no strategy is perfect. However, if you follow these steps, I guarantee you it'll maximize your probability of actually catching these trades. Okay, so let's jump into it. All right, you guys, so we're back. So I'm going to walk you guys step by step in how to find this. And with this particular strategy, you have to be patient, because patience, we all know patience equals profits. And so I'm going to show you exactly how to find it and how to break it down. So in the strategy, in the steps, the very first thing we have to do is identify the current market structure on the daily time frame. So as we can see that currently right now, we can see that the market is bearish. We're in a downtrend currently right now. So we'll locate our highs and lows on the daily time frame, and we'll use our circle tool to do that. So we have a low here, lower high, lower low, lower high in this area here. Okay. Now the strategy says find a POI on a 4-hour time frame. So if we go to the 4-hour time frame, let's go ahead and move these circles over a bit. That way they line up with current market structure and our low and high points. So now we have to find a POI on a 4-hour time frame. Okay, so if you guys notice, we have a huge impulse to the downside here, which actually left us with this imbalance within the market. Let's go ahead and notate that. So we have a 4-hour imbalance here. And then we also have an imbalance here to the top side as well. Okay. So these are our 2 point of interests that we actually found when looking at the 4-hour time frame. Okay. Now the strategy says wait for price to enter your POI, then try to identify Wyckoff on the lower time frame. Okay. So let's go ahead and watch price play out. Okay. So now we can see that price has wicked into our point of interest. So let's drop to the smaller time frame and see if we can find Wyckoff. Okay. So we'll drop to the 30-minute. And if we look at this on the 30-minute time frame, we can see that we have some rejection in this area and we have price given a swing, possibly going to the downside. But we can't necessarily see Wyckoff because price isn't that defined on the 30-minute. So let's drop to the next time frame, 15-minute. We can see that we definitely have some highs and lows that we can potentially see on a smaller time frame, but still is not quite defined. And so let's go ahead and drop another time frame. Okay, so now we're on the 5-minute time frame and we can actually see highs and lows, and we can see that Wyckoff is definitely present within this area. Okay, so first thing that we want to do, we want to find our resistance and support lines within Wyckoff. So we can see that price impulsed to this area here and then gave us a pullback. So this first point here, this first highest point is considered as our BC. Okay. And so this is going to be our resistance lines here. Okay. But for this, I'm going to probably change this to a dash line just because I like the way the dash lines look a little better. Okay. Now next that we're going to find is this area here, which is our AR. This is going to be considered as our support lines. Okay. Now within this area here, this is our trading range. Okay. So let's go ahead and mark up our schematic. So as you guys can see here, we have a BC, which is our buying climax. We have the AR, which is our automatic rally. This point here is higher than our BC, which gives us a UT, which is an up thrust. Price came into our trading range, and we can possibly see a UTAD for price to come up here, but we noticed that price actually broke all the way through our trading range. So this point that broke into the trading range and came up, this is considered as a test. This here is considered as an LPSY, last point of support. We have, as I can see, we have quite a few of those. We'll utilize one here, and we also have one here. Okay. Now, one of the things I'm going to do with this particular strategy, I'm actually going to move my support and resistance lines down to the bodies of these candles. Okay. And so it's your preference in how you do it, but in this example, I'll move it down to the bodies. Okay. So let's look at the strategy and see what it says. So the strategy says, okay, we found Wyckoff schematic on the lower time frame. Okay, after a break of structure, use your fibs and find the highest point of interest within your Wyckoff schematic. So basically, let's check and see if we have a break of structure. So let's look at market structure on this particular time frame. So as we can see, we have a high, higher low, higher high. And then as you can see, this potentially could have been a higher low, but it never broke. We never got an impulse that broke this short-term high here. So we actually have a break of structure right in this area here. Break of structure on the 5-minute. Now with the schematic that we have, as we can see, price came from the downside, gave us a buildup, and then it started to dip off. So this particular schematic is a distribution. Okay, so this is the distribution schematic in which we're looking at currently right now. All right, so from there, what we want to do, what does the strategy say? After your break of structure, use the fibs and find the highest point of interest within your Wyckoff schematic. Okay, so now there are a couple of areas that we can look at. Let's see if we're going to start to see a pullback. Okay, we're starting to get a pullback now. So let's go ahead and use our Fibonacci tool. From the swing high down to the swing low. And we can see everything above this LPS area here is within our golden zone. So that's where we want to be. So now let's find a point of interest. Okay. So right off the bat, I see a couple point of interests that we can actually notate. We have an imbalance in this area here. Let me move this down a little bit. We have an imbalance right here. I'll move that over. Let's see if we see any others. Okay, see we have another imbalance. Actually right here. Okay, I can see one right here. So what does the strategy say? After the break of structure, use the fibs and find the highest point of interest. So now we're going to take this and we're going to put it on this point of interest here because this one is higher than this one here. Okay, now the strategy says set your entry at the point of interest. Okay, so let's go ahead and get our sell tool and we'll set it right here, right on this imbalance for this particular strategy. Now it says set your stop loss at the body or the wicks of your point of interest. So it's your choice in how you want to set this stop loss. So we can look at the bodies here, move it over, and we'll notate this as our stop loss, and we'll move this down here. See, this is right at around 3 pips or so. I'll move it up just slightly. Move it up to about 4 pips. Okay, right there. Now it says set your TP at the nearest equal lows or equal highs, depending on if you were going in an uptrend. So we're going in a downtrend. We're going to look for the nearest equal lows. Okay, let's move this over and let's kind of look at price. So for me, I can see this area here. You have area that's respected here, here, and possibly here. So for me, I'll utilize this body here and move price over like so. And this here, would be my target down. Hold on, let's actually do it here. This will be my target down right here. This is my potential target right here, you guys. So as you can see, this is a 1 to 10 risk reward. Okay, let's move this over a little bit more. That way we have room to actually see the trade play out. This is our imbalance entry. And here is our stop loss and our take profit. Keep everything lined up. That way we can see it. Okay. Now from here, let's go ahead and let price play out and see what it does. Price wicks us in, takes us right to our TP. Never hit stop loss. So as you guys can see, this is a 1 to 10 risk reward for this particular strategy. And this strategy, it plays out a lot, you guys, on a lot of different pairs. But as you can see, you have to be patient when you search and catch these different strategies. Don't get FOMO. Like for example, you see this area here, price didn't quite get up there. Don't get FOMO and hop in and thinking, hey, I missed the entry. No, let it play out. If it don't hit this entry, then the trade is invalid and search for something else for another day. But this is a really good strategy for those of you who are looking to try to get funded with prop firms. If you're looking to get funded, you know, with those particular prop firms, you have to grow the initial challenge by 10%. So if you're utilizing a strategy like this, where you're taking a 1 to 8 or a 1 to 10 and things like that, you can utilize 1%, and this is a 1 to 10 risk reward, and you can literally pass the challenge with one trade. So like I said, you guys, strategies like this, whenever I see this in the market, I'll constantly put these in our chat. We have a Discord channel that we'll have in the description. We can put these in our Discord channel. That way you guys can look at them. We can start back testing them, and we can find these different strategies more and more. That way we can capitalize on them. Okay. Hey, you guys, I want to thank you for rocking with me. I hope this was informative, and I'll see you on the next video. All right. I'll see you.